Trader Theo here. This is episode 3 of Chart Setups of the Week, where I walk you through high probability trade ideas and market breakdown. First one on the list is the Bitcoin. The price last week ended as a doji candle, small body compared to the week as well. And if from Monday onwards the price breaks above this previous week's high, we might going to see further move to the upside. And why not a test? And we know they are very volatile, maybe a new all-time high. So the weekly chart so far has bullish implications, and we do expect further continuation. If we drop down on the 4-hour time frame, we zoom out a little bit, we can see the market is in a downtrend. The price makes lower highs and lower lows. At this point here, the price dipped up to almost 100k, and then it bounced all the move and it came back to 105k. Now, this indicates that the buyers, they stepped in aggressively because the sellers, they didn't manage to keep the price below this resistance around 104,000. So if the price breaks above the previous week's high, we might going to see further continuation. But for now, there is no probabilistic edge to decide if we are buying or selling, because the market kind of broke its structure up to here. So I would like to wait and see what's going to happen. Next one, let's check the Ethereum. Ethereum is considered weaker than the Bitcoin. On the weekly time frame, it's the fourth week the price didn't push to the upside. Now, is this an indication that the market wants to dip further down? Maybe, because the buyers led by this bullish Marabozu didn't even penetrate the 40 weekly moving average. The reason I use the 40 period here, it's because it reflects the 200 period on the daily chart. Now, do I trade the moving averages? No, I don't, but they are exceptionally good trend filters. And see how the price respect the moving average, even in cryptos on the 4-hour time frame. We want to see some price actions to go short here, because if we trade the trend on the 4-hour, the price made lower highs and lower lows, and why not look for short positions, right? But we have to be careful because the buyers, they kind of start taking over. We don't know if they will let the price to dip down a little bit and then to buy from this support again around 2,450. So let's be cautious. If we're going to sell, try to manage your risk accordingly up to this level. If we see long bearish candles like we saw here, then definitely we're going to just target the previous week's low. Next one, we check the foreign exchange market, starting with the Australian dollar against the US dollar. Last week, we had the non-farm payrolls. The majors moved sideways, no clear direction. On the weekly chart, the candle remained as an inside candle. On the 4-hour time frame, the market has bullish implications because the 20 is above the 50 period moving average, and the price made higher highs and maintained the higher lows. So if you believe and you want to be a buyer, the market now it's somewhere around the 50 to 61.8% Fibonacci. I can show you using the Fibonacci retracement tool here. It just bounced from the 61.8. I would like to leave the market to settle a bit, to be honest, before I get involved. The reason I don't pretty much like the idea to rush and buy the market, it's because the price last Thursday didn't break above the old resistance. And this is a red flag. Maybe the sellers will activate it at some point and start the downtrend. So it has some valid questions here. We can have second guesses in this market, so I prefer to find markets they are straightforward. But again, the analysis for next week is based on what we see in the markets, reading the charts. Moving on, euro against the US dollar, weekly time frame. There is a strong supply zone developed around this area. The price last week ended as a shooting star, as the price was making higher highs and higher lows, and a noticeable upper tail compared to the small real body. This by itself, it has bearish implications, but according to the trend on the lower time frame, the market is in an uptrend. The only way to start looking for short positions based on the market structure is if the price penetrates this swing low, close below the S1 support, because this swing low and the S1 support are in a very close distance. We have to wait and see what the price will do. If the price creates a lower low below this support, then we might gonna take this, we might gonna validate this more as a false breakout, and we can start looking for short positions a bit earlier. We don't necessarily wait for a second lower high, this high with a new high that can develop. We can just go for short positions because we examine the relationship between this swing high and that swing high. And the price can drop all the way to 1.12, which is the next support. USD against the Japanese yen on the weekly time frame. The price didn't follow the bullish engulfing, as you see from the last market review. It remained as an insight. If you remember it, you can rewatch the previous video. I mentioned that yes, we had a bullish engulfing form here, but the trend it's clearly down, and we don't know if this will activate the buyers. But the buyers last week didn't manage to create a new high. The price remained inside the previous week's highs and lows. It means that on a 4-hour chart and lower time frames, the market is rangy. So ideally, what we want to see is the price breaks and close above this high or breaks and close below this support. The price now, it's 50-50 to move upwards, to move downwards. Some traders might see this, or you might see that, and you explain this high with that high, inform the higher high, and you want to take this low with that low, and you make a higher low. Now, as a professional market analyst, this is not how the market is rated, and I'm sorry if I harm your feelings okay, at this point, but I would like you to become professional and experienced in reading the market structure. This will allow you to experience great profitability in trading. It's going to be an add-on, the most important add-on, to be honest, and then we follows the rest. In this case, if this high is higher than that high, and the swing low down here it's higher than that swing low, it doesn't define any market structure at this point, because we had the definable market structure right here. So either we're going to use this high with that high and this low with that low, or we're going to wait for a clear break above here or a clear break below here, because the market on the higher time frame, the weekly chart, is trading downwards. Here against the Japanese yen, the price reached a strong area of resistance. I want to see a clear break or reversal at this resistance here before I commit it to do anything. On the 4-hour time frame, the price obviously makes higher highs because the weekly it's a strong bullish close candlestick. If this resistance hits the beginning point of the sellers, then we're going to see a transition and a downtrend most likely to be developed, but we don't know what's going to happen. I prefer to stay with markets they have more clarity than this one. Great British Pound against the US dollar. The price still makes higher highs and higher lows, although with it lacks the momentum, as we see from the candlesticks. Both moving averages, they are above each other. It's a strong uptrend on the very higher time frame, but we don't trade the weekly charts, right? We trade the 4-hour time frame and lower time frames. Or if you use the 4-hour time frame to do your analysis and you go down to the 15 minutes to do your execution, that's also something significant. In this case, the price maintains the bullish biases on a larger scale. The fact that the price failed to make and sustain a higher high, it's just false broke this swing high. It also leaves a lot of question marks, and we must see the price either create a strong downward move and test the support. Let's see what's going to happen at the bounce, or we have to wait for a clear close and drop below this S1 support before we commit to short. All right, because the non-farm payrolls on Friday, they didn't position the market well. I would say the majors, they are playing some games. So, but if we're going to see retracements on the higher time frames, it means the lower time frames, they're going to develop downtrends. Why retracements? Because the market are in euro and pound are in a strong uptrend. So retracements on the higher time frame, bearish retracements, will lead to lower time frames downtrends. USD Swissy 4-hour time frame is ranging, but let's start with the weekly chart. There is a doji candle form here. It false break the previous week's low. Now, this has bullish implication by itself, but now the market is in a downtrend. I prefer to wait and see the price breaks below the S1 or close above the R1 before I commit to do something here. Next one, USD Canadian dollar. It's very similar with the USD Swiss. The price makes lower highs and lower lows in a downtrend. It closed more bearish, this one, which means the Canadian dollar was stronger last week. On the 4-hour time frame, the market is in a downtrend. I prefer to trade this one, to be honest, price action wise, during the New York trading session rather than during any other trading session. Next one, gold, something that many of you like to trade. Weekly time frame, it created a nice false breakout here, although the price makes higher highs and higher lows, but because we went so far to the upside, there is a long-term, about 1.5 months consolidation on the weekly chart. So at some point, the price might gonna retrace some of this upward move. So I believe we can see some good short opportunities on the gold anytime soon. Candlestick wise, the sellers, they became active, but for me, the previous week's low, the support must be breaken before I commit to go short on the gold. But I like the fact that the sellers, they are dominating the market because maybe they're going to develop some good trends. If we drill down to the hourly time frame, definitely we see also the moving averages, they cross the market change structure, lower highs and lower lows, more red and large candles compared to the green candles, and we can wait for a retracement somewhere around here to go short. That might happen on Monday as well. Next one, the US oil. The price, it sits around this resistance, although a large bullish candle appear here, there is a strong area of resistance, so we have to be patient. On the 4-hour chart, obviously the market makes higher highs and higher lows. A break above this resistance will help me to decide and go long for here. If the price gets rejected, moves downward, I'm going to try to be a buyer up on a strong price action around this area, but if the price breaks below this low, I will definitely go to the sell side because most likely the market is turning. As you see, I just play with the swings, market structure first, price action second. Platinum, it was very explosive last week, and the price now reached the next area of resistance over a week. I wouldn't like to trade this one on the lower time frames, as you know. But anyhow, if you're trading this price, it's in a strong uptrend, so we are looking to buy. And last one, the copper. The market falls break these areas here. Also, it found solid resistance around this level exactly at 5.9. On the 4-hour time frame, the price made a higher high. This swing low, it's still intact, it's still valid. Let's see what's going to happen from this point onward. If the price will keep moving downwards, the price action support further downward move, but the swings are still pointing an uptrend. Now, if you want to trade this treat this as a downtrend and you are impatient on the hourly time frame, obviously the trend shifted and it's in a downtrend. But you have to understand that at any point the buyers can step in because the market likes to follow the higher time frames and not the hourly or the 15-minute time frames or 5-minute charts. Okay, so either you wait to see a clear lower low, or you start looking for short positions immediately and you trade it to the downside, but you have to also manage your risk on the trade. These were your setups of the week. Ensure you manage your risk per trade, trust your edge, and trade with confidence. I will see you next time.